thank you. Let me be the first one to welcome everybody to the world of digital scarcity. And before we get into the implications of that, let's just do a quick survey. So how many people in the room own Bitcoin? Hands up. Okay. Now, how many people have heard about Bitcoin 8 years ago? Ooh, more than I expected. Very good. You guys are really on the ball here. So leave your hands up, though. And how many people knew 7 years ago? 6 years ago. Add your hands up. 5, 4, 3, 2, 1. So what you're seeing here is an idea whose time has come. There we go. Now, Bitcoin didn't emerge in a vacuum. More than 10 years before Satoshi published his first white paper, there was another invention out there by a guy named Adam Back called Hashcash. This was a critical component to the development of Bitcoin, and it was even referenced in Satoshi's white paper. And around that same time, a book called The Sovereign Individual was published, and in it, the authors predicted with stunning precision the emergence of what they called cybercash, what we now know today as cryptocurrency. And in these days, peer-to-peer file sharing was, nothing new. It had already amounted to over 50% of all of the internet traffic, depending on where you were. The files being shared were static and unchanging, though. And so, if somebody wanted to update that file, there was a problem. So who gets to do it? When can they do it? And how does everybody know that the update is legitimate? So in computer science, this is called the Byzantine generals problem. And it stumped many earlier attempts at creating a successful cryptocurrency built on a peer-to-peer network. But in late 2008, an unknown developer, calling himself Satoshi Nakamoto, announced to the world that he had figured it out. And then he published his code called Bitcoin to prove that it worked. And in doing so, he ushered in the age of digital scarcity. And now we live in an age where we can create open, decentralized systems made up of uniquely identifiable, unforgeable units with an incorruptible chain of custody. The value propositions of that decentralized technology far surpasses any system presently being used by the banking or security system of today. Oops, wrong direction. The previous age was the centralized trust model, with privileged authorities standing in the middle of every transaction, deciding what happened and what didn't. And as a result, huge investments needed to be made in the security and the stability of these systems. Everybody's seen the data centers and masses of servers, millions spent on security, creating these walled gardens where the financial infrastructure lives. Still, though, this gets hacked. And only 2 years ago, the SWIFT system was penetrated by a hacker who took $100 million out of that system. Our credit cards may as well be an open book for hackers because banks now are just factoring credit card fraud into the cost of doing business. So we can't really, I need to stress that we can't underestimate what this age of digital scarcity means to the financial industry. Because we now live in a world where a 10-year-old can create an international currency, and your mobile device now has the same capabilities as a bank. We now live in a world where billions of dollars worth of assets can be expressed in 12 words. Value transfers have become speech. Your password isn't access to your money, it is the money. Now, this isn't an incremental improvement in technology. It's a complete upheaval in the distribution model of financial services. So let's consider another example that's a bit further along. In the early 1990s, the internet and file compression technologies like MP3 and MPEG spurred on a wave of file sharing. First, on centralized systems like Napster, but then moving on to decentralized systems called torrents. And oh, how the record companies and cable TV stations loved these new technologies. Now we have on-demand, high-definition television, online radio stations, streaming music services, and we live in a world dominated by names like YouTube, iTunes, Netflix, and Spotify. In 20 years, the entire media industry was completely transformed. This pattern seems to repeat itself over and over again. Every time we create a new disruptive technology, it hits the market, and in 20 years, it's accepted as just how it always has been, or should have been. Another example, in 1900, only 4,200 automobiles were sold in the United States. But by 1920, cars had surpassed horses as the primary mode of transportation and freight haulage. Again, 20 years. The world was completely transformed by this new invention that had a fundamentally new approach to solving an old societal problem. We're now in year 9 of Bitcoin, and what have we seen? Well, it started with denial. A lot of people, including myself, in the very early days, we couldn't take Bitcoin seriously. It was just a fad, geek money, nerd money, something that the people in the internet and the far reaches of forums used to just play around with. But Bitcoin grew, sometimes at a shocking pace. Then came the anger. Bitcoin was stupid. It was absurd. It would never succeed. There was nothing backing it. No gold, no government. It was the domain of drug dealers, terrorists, and other criminals. And still, Bitcoin continued to grow. And now we're hearing bargaining. Bitcoin was just the test case. The industry incumbents now are going to put the yoke of centralization back on to this technology and make it respectable. Mere databases plus cryptography is going to be enough. After all, decentralization can't be trusted. Native tokens don't provide the incentive for independent businesses or independent actors to secure the network. There's already hundreds of currencies out there too, and another one is just going to be confusing. And Bitcoin just keeps growing and growing to over $20 billion in market capitalizations. If this was a company, it'd be one of the fastest growing companies in history. The world that this technology is bringing is going to astonish everyone in this room. Billions more people in the world are now going to have the ability to participate in an advanced financial industry. They're going to have access to banking and lending services, capital markets, and things that we haven't even invented yet. And it's all going to happen over open, decentralized networks where things like distance and borders are meaningless. Trillions of dollars are going to be freed up and put to use, bringing about businesses and growth that we haven't seen since the Industrial Revolution. We're halfway into this transition, and we need to start asking ourselves, who do we want to be in 10 years' time? Netflix or Blockbuster Video? iTunes or HMV? The choice is a bold one, but it is ours to make. Thank you. So, I guess questions? Yes, sir. Oh, sorry, did you have your hand up? Okay, yes, sir. So Equibit is the capital market that is going to plug into Bitcoin. So Bitcoin was the first implementation of this technology, and it was the Internet of Money, and Equibit is now going to be, hopefully be, the Internet of Securities. So it's a securities registration and transfer system, equity, debt, primary and secondary markets. Yes, sir.
Hi. Let's say, for the sake of an argument, that Bitcoin is the greatest thing since sliced bread. It works perfectly. There's no fraud. There are no glitches. Everyone starts adopting it in massive quantity. A lot of the people in this room start purchasing items. They start favoring stores and merchants that operate in Bitcoin, and their competitors see that happening. And Bitcoin itself becomes wildly popular as a currency. The question that I have is, we live in a society, in Western society, most governments are running deficits every year. They are accumulating huge debt, $20 trillion in the case of the United States, and the manner in which they meet those shortfalls, those annual deficits, is by printing currency. Central bankers depend on a currency that they can manipulate, print. That's why we left the gold standard so many years ago. And now we have Bitcoin that follows a certain algorithm. It's fixed in quantity, as far as I understand. Its existence is out of the control of those central bankers. So how can central bankers ever accept Bitcoin in that scenario?
Well, that's a really good question. Yeah, this is an aspect of Bitcoin that certain academics and central bankers have attacked because because it can't be manipulated and expanded or inflated at will. But of course, that's that's a feature. That's not a bug, and it's why people from countries all over the world now have been flocking to it. So I guess to answer your question, can a central banker accept this? I think they could, but they have to, I guess, readdress their role in the country as the keeper of the value of the monetary unit. The central banks also operate as a settlement mechanism, and so these peer-to-peer networks can also take that job off their plate, and they can work more as a prudential regulator of the financial institutions that are using these networks, rather than the source of all of the money in the country, good or bad.
What about the regulatory aspects of this? Like it or not, capital markets is regulated country by country, and that's not changing anytime soon. So I was just wondering if you can comment on that aspect. Thank you.
Well, there has been a lot of harmonization going on. Of course, in Canada and the US, we have the concept of accredited investors and AML, KYC. In Europe, it's very similar. We have professional investors, which are basically the same thing. So a lot of the basic hurdles to get into the various tiers of the market are there. But in a lot of other countries, there is nothing to be found that is the same as that. So in a global decentralized market, you have to create I guess a compliance system that is flexible enough that it can work in all of these instances. And so with Equibit, we focused in on restricting the transferability of securities. And so we have a system built into it called the trading passport. And so companies can put their securities behind a trading passport that they use to enforce whatever compliance regime they're beholden to. But it's also useful if there's a shareholder agreement and you have to, the shareholders have to vote on every transfer of the shares, or something else has to take an effect. So by focusing on transfers, we can create a very flexible compliance system that works with regulatory obligations, with shareholder agreements, and anything else. Yes, sir.
Hi. So from my understanding is that most investors in Bitcoin at the moment hold them as commodities instead of any intrinsic currency for the purpose of trading. Do you see that trend moving towards Bitcoin being used as currency instead of commodities for speculations in any near future?
Yeah, absolutely. That's already happening now. You can see there's a number of companies now that are trying to launch funds. Some of them just invest in other cryptocurrencies, but others have a different mandate, and they're going to be investing in businesses, real property. And so there's a lot of work going on in the cryptocurrency space now, bringing mainstream investments and connecting them to the Bitcoin ecosystem, because of course, a lot of that $20 billion worth of Bitcoin is just kind of sitting around, and people are watching their balances just appreciate over time. And apart from that, most of it is just sitting around. And it's not being mobilized into building businesses, creating jobs, and, and really helping Bitcoin become, all that it can be. And so that was one of the things that I was hoping to do when we release Equibit, is to mobilize a lot of these extra Bitcoins into businesses and jobs and people building products and services, not only in the Western world, but of course all over the world, because it lowers the costs of doing business so much that people, the other 4 billion people in the world can now access these kinds of financial services and get to work in ways that they weren't able to before. Yes, sir. No. So a stock exchange is a market-making system and an order matching system. So that's not exactly what Equibit is. So behind a stock exchange is a service called a transfer agency, and we also have things called central security depositories, or CSDs. Yeah, the custodians. So this is the layer of the financial system that Equibit fits in, and it's also, in my experience in stock brokerage, this is where the most improvements can be made, because the system was built in the 70s after an event called the Paper Blizzard of 1970. It bankrupted a whole bunch of firms because they were drowning in settlement paper that they couldn't process in time. So they centralized all of the ownership of all of the securities into these institutions, and then rebuilt the brokerages and the stock exchanges around it. So now with blockchain technology, we can actually take that centralization aspect out and enjoy a system that is open and free for all of the capital market participants to use and conduct settlements with in real time. Okay, so thank you very much.